Good day, Junior Tickies. I'm Mrs. Brimacombe. We are going to look at adjustments where the focus now is going to be on errors and omissions. Before we start with the activity, when we look at errors or omissions, first of all, identify which account was debited or credited incorrectly. If an account was debited by mistake, what do we need to do? We need to credit the account which was incorrectly debited so that the correct account can be debited. The same happens if an account was incorrectly credited. It means we need to take it out of that account. To take it out, we need to debit that account so that the correct account can be credited. If we look at activity 5, prepare the journal entries for the adjustment, post to the general ledger, show the effect on the counting equation. So if we look at adjustment number A, stationery worth 750 were taken by one of the partners, Onion. This was incorrectly debited to the stationery account. Correct the error. So if we look at drawings, and stationery, drawings is an owner's equity account minus plus. There were no balance brought down from the pre-adjustment trial balance. If we look at stationery, it's an expense. So from the pre-adjustment trial balance, the total brought forward will appear on the debit side. So what happened with stationery? They've incorrectly debited stationery with 750. That means that must be taken out. And to take it out, stationery will need to be credited so that the correct account can be debited, which is drawings. To show this on the accounting equation and in the general journal, account debited, drawings, you must be specific. In a partnership, you need to write the name of the partner. Account credited, stationery. Effect on the accounting equation, owner's equity minus, expense minus, which means it will have a positive effect on the owner's equity. At the end of the accounting period, stationery is closed off where to? The profit and loss account. So take the debit side minus everything on the credit side. That equals the total expense for this accounting period, which is 11,250. Adjustment number B. 1 month's rent is still owing at year end. The business paid for the painting of the premises, 12,600. And it has been debited to sundry expenses account in error. As the landlord is responsible for the repairs, the 12,600 will be deducted from the rental payment. So from the pre-adjustment trial balance, we've got rent expense, total brought forward, 165,000. Sundry expenses on the debit side, 39,910. So first we're going to correct the sundry expenses. Sundry expenses were incorrectly debited. This means we need to take it out. To take it out, we need to credit sundry expenses. Account which is going to be debited is rent expense. Why? This is not the responsibility of the business. It's the responsibility of the landlord. So it's not our expense. We are going to take it off from the amount that we still owe. Now to show the rent which is still outstanding. Before we show the rent which is still outstanding, if we look at the accounting equation, account debited, rent expense in my general journal, rent expense will be debited as well. Account credited, sundry expenses. Effect on the accounting equation, Because my expense decrease, it will have a positive effect on the owner's equity. Because my expense increase, it will have a negative effect. Now to show the monthly rent, which is still outstanding. The total rent expense is 165,000 because 1 month is still outstanding. It means that we need to divide that by 11 to find the monthly rent. So this means 15,000 still needs to be paid. But now, 12,600 of that we have already actually paid by doing the repairs. So the amount that is still outstanding is 15,000 minus 12,600, which is 2,400. So rent expense, because it's still outstanding, it will be added to our expense, 2,400, which is debited, account credited, accrued expense. We still owe 2,400. On my accounting equation, account debited, rent expense, the same in the general journal, account credited, accrued expense with 2,400. Effect on the accounting equation, because my expense increase, it will have a negative effect on the owner's equity. Liabilities will be plus. Accrued expense classified as a liability. My narration in my general journal, first we're going to say the sundry expenses was incorrectly debited, so we needed to correct that. Then secondly, we need to show the 1 month that is still outstanding. At the end of the accounting period, sundry expenses is an expense which is closed off to the profit and loss account. Take the debit side minus everything on the credit side. This is my total expense for this accounting period. Rent expense is also closed off to the profit and loss account. So add everything on the debit side. That will be the amount that will appear in my profit and loss account as my total rent expense for this accounting period. Accrued expense will appear in the balance sheet account section. So we need to calculate the balance, which means that 2,400 is the balance carried down, balance brought down. This is the alternative method which I spoke about, where the correction of sundry expenses is taken to accrued expense, which means that account debited is accrued expense. Remember that accrued expense is a liability, so it will show that our liability is less. Account credited, sundry expenses, because we need to correct the sundry expenses. So sundry expenses will be credited. Effect on the accounting equation, because my expense decrease, it will have a positive effect on the owner's equity. Because my accrued expense is debited, my liabilities will decrease. If we look now at what happens now with rent expense, the total rent expense which is still outstanding will appear in your rent expense account, which means that rent expense is going to be debited, account credited, accrued expense, the total 15,000. Effect on the accounting equation. Because my expense increased, it will have a negative effect on the owner's equity. Liabilities will be plus. Take note, accrued expense, the balance is exactly the same as in the previous illustration. Rent expense, the total for this accounting period is exactly the same as in the previous illustration. Adjustment number C. Received an invoice from Fast Car dealership for 35,000. This was for installing a canopy, 25,000, and doing repairs to the vehicle. The transaction was recorded, but the entire amount was added to repairs. So from the pre-adjustment trial balance, vehicles has a balance brought down on the debit side because it's an asset. Repairs has a total brought forward on the debit side because this is an expense. So what happened here? The entire amount, that 35,000, was debited to the repairs account. That consisted out of the car, the vehicle that got a canopy, which means it should have been added to your vehicle account. And it consisted out of repairs. So this means that that 25,000 must be taken out. To take it out, it means that repairs will be credited, account debited, vehicles with 25,000. To show it on the accounting equation and the general journal, account debited, vehicles with 25,000, account credited, repairs with 25,000. Effect on the accounting equation, assets plus, because my expense decreased, it will have a positive effect on the owner's equity. Narration in my general journal, what happened? Repairs incorrectly debited. End of the accounting period, vehicles is an asset, so we need to calculate the new balance, add everything on the debit side, that equals the balance carried down, means balance brought down. Repairs is an expense, which means we have to close it off to the profit and loss account. So take the debit side minus everything on the credit side. This is my total expense for this accounting period with regards to repairs. Adjustment number D. The partnership agreement stipulates the following. Salary allowance, Apple, 250,000 per year. Salary allowance to Onion, 290,000 per year. The salary allowance of Onion was correctly recorded. However, the salary allowance to Apple was incorrectly recorded in the salaries and wages account. Remember, in partnerships, when a partner, takes his monthly salary, it means that drawings is debited and bank is going to be credited. It has absolutely nothing to do with salaries and wages. At the end of the accounting period, we need to show what is a partner entitled to his salary over 12 months. So what happened now is that they've incorrectly shown the salary allowance to Onion as part of the salaries and wages, which means we need to correct that. From the pre-adjustment trial balance, salaries and wages has a total brought forward on the debit side because it's an expense. Salary Apple, there's no total brought forward because we still need to correct that. Salary Onion, 290,000. Salary to Onion is regarded as an expense. So salaries and wages was incorrectly debited with 250,000. We need to correct that. To correct that, it means that we need to take it out. To take it out, it means salaries and wages will be credited. Account debited, salary of Apple. On my accounting equation and in the general journal, account debited is salary Apple with 250,000. Account credited, salaries and wages with 250,000. Effect on the accounting equation, assets 0, salaries and wages, because my expense decrease, it will have a positive effect. Salary Apple, because my expense increase, it will have a negative effect. Liabilities, nothing. Narration in my general journal, salaries and wages incorrectly debited. So at the end of the accounting period, all income and expenses must be closed off. Salaries and wages forms part of your operating expenses, so this is closed off to the profit and loss account. Take the debit side minus everything on the credit side, and this is my total expense for this accounting period on salaries and wages. Salary of a partner forms part of the distributions of profits. So although it is an expense to the business, this is closed off to the appropriation account. The same as with salary onion, where do we close it off to? The appropriation account. Thank you very much. In our next activity, in activity 6, our focus is going to be on interest expense and interest income. I want to leave you with this quote: "It always seems impossible until it's done." Have a wonderful day.